The broadcast is now starting. All attendees are in listen-only mode.
Okay, we'll go ahead and get started tonight. Maybe somebody in chat can let me know that my audio is hopefully coming through okay. Okay, great. Let me know, I guess, throughout the webinar if there's any issues. The last time I did this from home, everything worked fine, but if it gets funky, just let me know. I appreciate you guys joining me tonight. I am Offshore Hunter in chat, Michelle in real life, and I hang out primarily over in the swing trade chat room now and run that room for Nate. And my focus is obviously primarily on swing trades, but I day trade as well. Those tend to be longer in nature. And the format for anybody that's new tonight that hasn't attended one of my webinars before is I'll just go through the questions that have been sent in and any chart requests. After I go through those tonight, I have prepared just kind of on a high level how I go about my swing trading. We've got a lot of new members, and I've had a lot of questions on that, and I haven't sort of reviewed that in its entirety for quite a while. So I'll go through that at the end, and I've got some chart examples and stuff for you guys on that. And then once I'm through all that, I'm happy to take other chart requests, or if we have questions along the way, we can stop as we go. So anyway, we'll start with the questions that that I had come in. Also, too, for those of you who are new and are interested or want to know where I hang out as well, I do my blog, which you can see here. It's tradeonthefly.com, and I do updates there 2 to 3 times a week, chart updates with setups. So for those of you who are not familiar and are interested, because it always seems like the question comes through on that, feel free to check that out as well. Anyway, so on to questions tonight. First question, just kind of wanting general market thoughts and charts, my 2 cents on that. And so I will bring up in my stock charts the SPX. So this first chart is the 60-minute chart, and those that are familiar with my trading, and I'll talk about this later, I like the 50-period exponential moving average on my 60-minute charts. Just helps me kind of with some general trend, you know, and obviously since the beginning of February, we've been trending up with a few very small pullbacks along the way. And today, the market broke down below that and still closed below it, but I'm not convinced that we're going lower here. I thought things held up pretty well considering the gap down, and I guess we'll see what it brings. On the daily chart here below that, we're still a little bit overbought, although the RSI didn't get over the 70 area. You can see it's turned down a little bit, and our MACD down below is showing some negative divergences here, but certainly doesn't mean that we can't go higher. You know, and I guess just try and take one day at a time. This market, you know, just has trained us really well to continue to buy the dips, and in general, a lot of the charts that I'm looking at, there's a lot of stuff that still looks really bullish and has a lot of room on the upside to go. And so some sideways chop or a little give back is just going to give a lot of the charts we're looking at time to rest and set up again. That being said, if the market does decide to go a little bit lower, I'd be watching that 1850 level as the first area that should offer some support. So I still feel a little suspicious that they want to see 1900 before they'll take this lower, but we'll see. You know, I just try and be flexible in my thinking and take it one day at a time, and you know, try and look at both sides of the possibilities. Where, if it's going to go lower, where could it go to, and if we're going to break higher, where could we go there as well? So anyway, just kind of my 2 cents on the market. Next question. Is there a good way to anticipate what sector will move next? And so I've talked in the past in some of my webinars, you know, about looking for sector rotation to help, you know, find the next setups or the next trade groups that may be moving so that you can be in some of those stocks and those groups early in the move. And what I look for is I'll often look towards, for example, the commodity itself, so natural gas, oil, gold, the ags, and look for plays that I'm familiar with within that sector And I also use general sector, the ETFs, to gauge as well. So the RLX for the retail, XLF for financial, SMH for semiconductors. For myself anyway, using those general sector ETFs, I can chart those and see how they're setting up. Are they overbought? Are they oversold? Those sorts of things. And then from there, I can either trade an ETF that's related to that, or I can look for individual stocks within those sectors that I like that may be setting up to move. So, and another example there is earlier this year with coffee and trading Joe off of that move. So you can use that in that particular example, understanding that commodity itself was setting up. And then I've been talking recently about the commodity corn and then the ETF CORN that follows that and how those are setting up. So, lots of different ways to play those. And I will say too, and I'll bring this up, FinViz has got a really nice scan that you can do. It's just finviz.com. I'm sure a lot of you are familiar with it. And so within this is just going to groups, and then I did performance, and you can see that we're bringing up sectors and industries. And if we click on these, which I'm not going to, it will bring up, the stocks that are in that category. And we can look at this by week, by month, by quarter, those sorts of things. So you get the idea of you can look at what's performing during the week, what's not, and then start looking within that, actually using this to look for stocks that you might be interested in that could be moving. So next question. When playing the sectors, there always seems to be one that leads the way. Is there a rule as to which one this will be? Will it be the one with the most volume? And how do I decide what company to watch for trend changes in the sectors? So I guess I would say I don't think there's necessarily a rule on which one will go. Typically when the sectors start moving, the larger caps will move first, and then the smaller caps, and the smaller names tend to move last and play catch up, as everybody that sort of missed the beginning part of the move looks for stuff to try and still catch part of the move. So, and I don't really watch one company for the most part. I prefer to watch those ETFs because I think that they're give me a better feel for the overall sector. If there's a few stocks in the sector that are having news and doing well, it doesn't necessarily mean that everything is moving with that. So I do like to use those ETFs to try and gauge, the sector as a whole. If I'm playing the sector, do I always keep the leader on watch, even if it's not the company I'm playing? No. Again, just going back to, I like to try and watch the ETF or the commodity that's related, since I, just feel like it kind of gives me a better overall view of what's happening in that sector. So that's how I kind of look at the sectors. And for myself, there's some sectors that I'm not as familiar with, and if they're moving, I may just choose not to play them. And we always have our go-to stuff that you may be more familiar with. As those sectors move, your favorite stocks that you're used to trading or more familiar with. So, it just depends on what your trade plan is, and how you like to play those sorts of things. So, let's see. Okay, so there was another question that came in on wanting to know about the chat room acronyms, and I would say Nate has this on the Investors Underground, so there's a link there. I'm not going to spend time going over that. That's pretty comprehensive. If you have specific questions on maybe something that I use, let me know, and I'm happy to cover that. But in general, that list should bring you up to speed on the acronyms that we use. So anyway, you want to see the screen again? Yes. Okay, hang on. So for FinViz, and so to get this from the home page, I just went to groups, and then I click performance, because you can do it by bar chart too, but it's not as complicated. I mean, you can play with this. FinViz is great. It has a lot of different scanning abilities and ability to parse different things depending on what you're looking for. And I just skim the top of this. I certainly don't go into a lot of depth, but it is helpful to me. So there you go. Okay, so you got that? Okay, hopefully. It's a great tool. There's a lot of different things. There's a lot of scans on this that you can do based on market cap. PE. I mean, it just goes on and on. You can do those scans, the things that you're looking for, and then save them for later use. So anyway, okay, so the next slide that I have for you before I bring it up, I want to explain it because probably if you're not in the swing trade chat room, you're not going to understand it. And also if you haven't been in there early, you may not understand it. So I will do a quick explanation before I bring it up. And the main reason, well, a couple of reasons that I decided to include it tonight. One, it was requested. And secondly, also, I just want to say that, trading it's hard and it's often very stressful. And so this next slide is also just kind of a reminder to all of us to remember to not take ourselves too seriously, and to just have a little bit of fun, which we do try and have a little fun over in the Swing Trade chat room occasionally. And this slide came about because when we first started the Swing Trade chat room, I decided to share my secret with those that were in the room at the time. And my secret is that I watch Harry Potter throughout the day while I'm trading. I love Harry Potter, and I watch the news first thing in the morning, and then typically some version of Harry Potter goes on. And there was a particular member of our Swing Trade chat room last week that was having a really hard time because he had decided to adopt my strategy of using Harry Potter throughout the day, but he just wasn't really sure on which one he should be watching and felt like he was really thrown off by it. So anyway, I decided to include this. You can see our little conversation that we had about it, and then down below I have included my preferences for the different versions of Harry Potter to watch depending on market conditions. So my secret is out now, and everybody knows that I'm pretty silly and I love to watch Harry Potter during the day, or at least have it on. So anyway, yeah. So yeah, that was for my friend, and I had him worried today, I think, about what kind of stuff I was gonna put up there. But anyway, okay, so back to the webinar. The next thing we've got here, charts. So these are all the chart requests that came in. I'm going to run through these before I get down to talking about what I do swing trading and my strategy there. So one of the first requests that came in was for kind of the gold and the gold miner setups. And what I will comment here is I had been working on the webinar yesterday, and I had actually popped all of the charts in yesterday, and I had to change them all today because gold moved through the resistance area that I had been watching today. And so it's up through the 1350 level. This is a daily chart that we're looking at. And I've got included here the weekly chart as well. And I had a really interesting conversation with someone about, the gold and some of the longer term charts here. And it was really good, and I thought it was really interesting, but on today's move, it changed my view from yesterday to today because we did move through resistance. And so this is the weekly chart. You can see the next level up here is around the 1420 to 1425 level on gold, provided that 1350 supports here. Because it's broken through that 1350 area, any retracement, I would want that 1350 area to hold. Anytime that a stock or a commodity moves through an area that's been strong resistance on any retracement, we want to see that previous resistant area act as support. So I'll be watching that, and I would expect that if it gets up to the 14, 20, 25 area, it should have some strong resistance there. If it does move through there, then we'd be looking at 1500. And then you can see on this weekly chart, we've got a pretty strong downtrend line. So just remember when we're doing these things and we're looking at the charts to, again, try and consider possibilities both ways, and let price be your guide. The next chart here I have is actually on the gold miners ETF, GDX, and this is a daily chart. This is from today. You can see that it's got a flag pattern or a pennant pattern, and it is just starting to try and move out of that today. Volume, isn't very spectacular here, so I'd like to see better volume on that breakout. We'll see if that follows through in the coming days. And here's the hourly chart on that. So you can see I've got my resistance line there, and it's just starting to perk through that. So we'll see if it continues to follow through on the upside. So, and I guess I did throw this in. If gold continues to go higher, theoretically it should drag the miners along with it. If that's the case, you know, there's some plays that we talked about. Nate had some nice things that he put in the swing trade chat room today that were gold related. And then Nugget here is a leveraged ETF on the gold miners. It's not attached to the commodity itself. This is the daily chart. And again, you can see the flag pattern, and it's starting to kind of peak above resistance there. And the volume's a little better here. So this certainly could get moving to the upside, but we'll see. So those are my comments there on gold and the miners. There was a chart request for SGMO, so I did that. And this stock had a really nice gap up. I can't remember if it was earnings related or if it was on, you know, some sort of trial news. But so my comment here when these stocks, this is the daily chart. The blue line is the 50-day exponential moving average. And when the stocks gap up like this, what I want to watch to see is that gap holds. And so you can see that if it's going to continue to the upside. And so here with this, we've got support just below 22. And we've got resistance above at 24. And right now it's just consolidating in between. And if this chooses to continue to consolidate, you know, it may take several weeks. I would expect that if it consolidates in this range for a while, that we would hope that it would move again and continue upward through 24. But in the meantime, it's just chopping. If 22 or just below 22 there doesn't hold, then yeah, I can hear Nate in the background too. I did that to him one day too when I was on. Yeah, maybe somebody can send him a note. Anyway, if the 22 area doesn't hold, then it's probably going to fill this gap back down below 20, and then I would want to reevaluate. So in the meantime, it's chopping, and those are my thoughts on it. Here's the hourly chart, and so you can see our areas of support here, and then our resistance above. And what we have here is the 50-period exponential moving average. It's moving up. The stock had a big gap. It's consolidating, and as it consolidates, you can see we've got volume declining here, which is good. It's acting fine. What we would hope to see is as this 50-period exponential moving average moves up, that it either flattens and goes sideways during the consolidation and then moves higher, or if this stock is strong earlier, once this gets up here, that it pushes it above 24. But time will tell. Next chart request was for Starbucks, a daily chart on this. The person, I think, has this in their portfolio for longer term. So I've drawn my lines. You can see we've got 2 points of reference here for a support line, and we had resistance here just above 75 or right around 75, and it's perking up through that area. So it's acting fine and acting well here. It's back above the 50-day exponential moving average. My next area of resistance would be around this 79 area, and then at the old highs at just above 82. My only comment here, so it's acting fine and it looks good so far. My only comment here, my only thought on Starbucks is, you know, wondering because coffee prices, you know, have moved so high and they're consolidating and may continue higher, if that's going to hurt these guys' margins in the long run. And that's reading a lot more into it besides the chart, but that would be a consideration or a thing that would be, I guess, in my mind, you know, owning this. I don't know when their earnings date are, but, you know, maybe it's not a big deal and maybe they're hedged, but that would be the only thing that I would wonder about with Starbucks is knowing, because I follow coffee, the commodity as well, and knowing how much it's gone up, how it may affect them with their margins going forward. But the chart itself looks fine. So, and then the last chart request that came in was for AGO. A daily chart, and so again I've drawn my lines here. We've got 2 points of reference, one from last October and one from the late January, February time frame that we can draw on as support here, and it had a really nice break above resistance here, and as you can see, you know, when we have these points of reference for our resistance, stocks don't, you know, it takes several tries to get through it, and we've got good volume on the break higher, which is what we like to see. And currently, this stock is flagging and acting very bullish. I think the question was they were thinking that it was overextended and they wanted to short. And my thought here would be that just below this 26 area, I'm not sure exactly what that is, if it's 2580 or 2575 in there, should act as support. We've tailed off of that area several times. Currently it's flagging, and I would be actually watching for a break to new highs out of this currently today looking at this. Now that could change tomorrow. And I guess one thing I'll say too on this looking at these charts is, you know, the charts change every day, so my opinions change every day as the charts change, and yours should too. You know, as the price moves and things change with whatever's going on with the stock or with the markets, you know, don't get so set in your frame of mind that, yes, it's absolutely going higher. Right now, it's a bull flag and it should break higher, but that could change tomorrow. So just be flexible in your thinking, and just remember to let price be your guide if something changes in the setup. So let's see. I'm just checking here in chat and make sure I didn't miss any questions that may have come through. Okay. So we will go on to my swing trade sort of strategy or recipe. And I'm going to go through this just kind of on a high level because I could spend hours, you know, going through this individually. But I've gotten a lot of questions kind of on, you know, my thoughts on swing trading and what I do and how I look for setups and those sorts of things. So I thought I would put that in here and just go through it with you guys. So in thinking about how I go about swing trading, you know, for me it kind of breaks down into four main areas that could have a lot of subcategories. But for purposes of this webinar, you know, the big thing is your strategy. You know, how are you going to determine what trades you take? And then once you figure out what your strategy is, you know, for me the next thing is my entries. Where should I initiate the trade once I've decided what it is I'm going to trade? After I've made the entry, for me then it's managing risk and then managing the trade as it develops, because if we're talking about swing trading, you know, and it could even obviously be applied to day trading as well, you know, but how are you going to manage that trade as it develops and the price changes throughout the day or throughout the days that you're holding the position? And then lastly, talk a little bit about exits. So the first thing is strategy. And to me, you know, your strategy basically should be your trading plan. And the first thing I'll say there, especially to the newer traders, is do you have a plan? And if not, you need to have some sort of a trading plan, and you need to write it down. It's easy to say, yeah, I got a plan and it's in my head and I know what it is. But I think as a newer trader, I really think that having stuff written down is a helpful reminder to you, you know, with your set of rules. You can obviously make adjustments to your trading plan along the way as you find new ideas or you tweak whatever it is that you're doing, but please write it down. And then next, with your trading and your swing trading, what time frame are you trading? And I think that's really important, because I think it's easy sometimes to you know, maybe be looking at the wrong time frame, or maybe not understanding if you're looking at a 15-minute chart and you're thinking about holding this for 3 days, or you're looking at a 1-month chart and your time frame is too small and not understanding where it's going to go. So make sure you understand, are you going to hold this overnight? Are you thinking for a 3-day swing? Are you thinking for 2 weeks or several months out? And that can apply intraday as well. You know, what time frame are you trading? Because, you know, and an example is a lot of times, you know, I will see stuff posted in chat, and people I know are probably looking at the 1-minute chart, and looking at the 1 or the 5-minute charts is very different than if I'm looking at a 60-minute chart. And it doesn't mean that one's right and one's wrong. It's just a very different view of what might be going on with the stock depending on the time frame that you're actually trading. So understanding what time frame you're trading. What instruments are you going to trade? Are you going to trade stocks? Are you going to trade options, ETFs, commodities, etc., bonds? So understanding what it is you're going to be trading, what criteria you're going to use to trade. Are you going to trade off of technicals? Are you going to trade off of fundamentals? Are you going to trade off of some combination of those? So, making sure that you're understanding those and how you're going to incorporate that into your trade plan and your strategy. And then how are you going to find the setups? And what are those going to be? Are the setups going to be, technical chart patterns, and how are you going to track those setups? And I will show you, I've got some slides next, and talk about what I look for and how I find my setups in going into this. So for myself and looking through what I've said here, as a new trader, I did have a plan written down. It's ingrained in my memory now, so I don't have it written down in front of me anymore. And I still make some small adjustments to my trading, as I learn new things. I understand the time frame that I'm trading. I trade only stocks and the ETFs. I don't do anything with options. The criteria that I use to trade personally, I would say 95% is technical analysis. I love charts. I'm very visual in my trading. I always say I never feel like I have enough real estate, enough screens to be watching everything all the time. And I get the question, well, why don't you just, have alerts, which I do have alerts and use those. But for me, there's something about looking at the chart and watching the setups that really helps me confirm, the price action. And then how am I going to find the setups? And for me, and we'll go through these charts. Again, I'm looking for specific chart pattern setups. I'm looking for triangles. I'm looking for head and shoulders. I'm looking for bull flags. And I find these setups at this point in my trading career. I have a huge bank of charts in stockcharts.com that I have segmented out by sector. And so I have that, and I have sort of a list of A, B, C, D that are my watch list that it's always getting filtered, and I'm always changing it of stuff I'm watching and setups that I'm watching to see how they're going. And then the stuff that's hot or that is moving, I transfer over into my Thinkorswim platform and chart it there. So there's definitely some redundancy in what I do, but it's just kind of how I do it. And so again, for me, I track those by keeping my Thinkorswim platform. And then, like I said, the stock charts is great because I can go back there, and if natural gas is moving, I can easily scan through my list and my charts of my natural gas stocks that I've accumulated that I like over the years and look to see what looks interesting there. So that's, kind of how I go about doing that. And just to give some examples here in talking about what kind of setups that I personally am trying to find, as people say, well, what are you looking for? What are you finding? And so here's an example. And if you guys look, if you're not familiar with some of the chart patterns I'm talking about, if you go to stockcharts.com, they've got a really good chart school area there that's free that you can use as a reference to look up what a bull flag is, or what a triangle means, or what a falling wedge is. But the types of patterns and the trade setups that I'm very interested in are things like this. So this is actually, I think this is yesterday's chart because I was working on this. But here we have a nice big triangle pattern. And what we're watching for on these, obviously, is a break one way or the other. And the longer term chart on this, I'm assuming a break up, but I could be wrong. Sometimes these fail and go lower based on news or those sorts of things. But the nice thing that I'll say on this as well is when you find these setups, because they take a long time. I mean, this is from July of last year. I mean, this stock has been developing this pattern now for almost 9 months, and it takes a long time, and you have to be patient sometimes with these setups, but they're worth waiting for and worth watching, because when they do move, a lot of times they move quickly, in a shorter period of time. So within this pattern as well, if it's something you're watching, you can start playing the ranges within if you choose to do that on a shorter term basis using support and resistance to buy and sell against. So while you're waiting for that setup to trigger on a swing basis, on a longer term basis, you can play those ranges in intraday, or like I said, for a shorter term swing for a day or two. Here's another example of the type of setups that I look for in my trading strategy. And this is corn. It's the ETF that tracks the commodity itself. This is a longer term chart of it, and it mirrors the commodities chart as well. And I love this chart. What I love about this is the long basing action that we have here. It's a rounding bottom, and it's easy to see here the change in trend. And this isn't going to be something probably, if it can break above this level, it might start moving a little more quickly. But, these bases, these are longer term swing setups, maybe for a month or two. But the base develops and it moves, finally starts moving above these moving averages, and those start to curl up and start trending up. And as they do that, we've got nice volume coming in, and that helps confirm the change in trend here. And so for me, I just start marking off my areas of resistance, that are potential areas for me to take profits as this moves up, let it set up again. I've drawn in a shorter term trend line here, but here's another example of the types of trade setups in my trade plan that I look for, and why it's important for me anyway to track the charts, and to have that bank of charts in there. So I'm always working on them. The charts are always changing, so I'm always redrawing my lines on stuff that I'm watching closely. So let's see. Yeah, exactly. Gryffindor. Here's another example of the type of chart setup that I like to look for in my trade plan, and this is BAS. I had it in my blog several times, and you can see from the lines that I've drawn on here, this isn't something that I just drew today. This was something that I've been watching for a long time, and so I had a resistance line drawn here, and the thing that's nice about this is, these things make the moves, and then you can move on if you choose to something else, but let them set up again, because they often will once they start trending. They can't go straight up like Plug did, for a week or whatever. When they're healthy and acting well, they're going to move up, and then they're going to consolidate or pull back and rest, and then it will move up again. But anyway, in this example, so you can see that I was watching this for 9 months last year, and it finally made the move higher up to the area that made sense to be resistance, which was in this, $17 area. And then it kind of messed around, fell back down below that, moved higher above that, and consolidated. And then on my blog, I was watching a move, and I think we were even watching this in the swing trade chat room. We were watching for a move above 18 on a shorter term basis, and also this here was a flag. So we're watching consolidation and a flag, and for the move above 18. So again, I've got my resistance drawn in there, and it moves above 18. And my next resistance line here did not offer any resistance, and maybe I could have chosen, I could have drawn a line here at between 22 and 23, and then just above 23 as well. But anyway, the lines are not always perfect. You just do the best you can, and this must have been earnings related. But again, so it moves above 18 and just makes a monster move, and at least right now it's kind of consolidating and flagging out again. So you can play these, and they make their move, and you can take your profits if you choose to, and let them set up and play something else for the week or two that they have to consolidate and rest. So anyway, those were just a few examples that I had for you of the types of trade setups, in my trading plan, and why I like those sorts of things and how I find them. I just find them by visually scanning through the chart lists that I have. So the next thing I want to talk about would then be entries. And for me, and I've talked about this in the past, for me, entries are really the most important part of my trade. And so for me, if I understand why I'm taking the trade, I have confidence in that trade. and it tends to make me feel a lot more settled in that trade as it develops because I understand why I'm in it. And I hear from, new traders often where they'll see the setups, they're afraid to pull the trigger, and then, they get frustrated because the trade moves like they thought it did. They just either were afraid to buy or, hesitated and it moved a little bit, and then they were afraid to get in because they missed the actual initial break, and then they miss, a bigger part of the move. So, I can't emphasize enough how important I think it is that if you understand why you're entering a trade, that it should help you give you confidence to help push the buy button. I think if you're chasing willy-nilly and you haven't spent some time doing your homework, you're going to probably lose money. You'll make money some of the time, but if you're not understanding why you would be entering the trade at the point you're entering it, I think you're just asking to have losses there because you're going to be scared if it goes against you a little bit, or buying at the wrong time. So I will say that I know that my entries are rarely perfect, and I often, I may miss the exact break because I might be scanning stocks or chit-chatting with somebody in chat or whatever. And for me, it's more important for me to be in the trade if it's acting as expected than me getting it at exactly 18. If it's at 18.10 or 18.20, and it's making that break, I still want in because for me, I want to catch the meat of the move. I'm not worried about paying a little bit more on the trade if I can catch, the larger percentage move. I always try and say, or try and remind myself in my trading that I want to get the middle. I don't have to get the exact bottom or the exact top. If I can get the meat of the move or a good chunk of the middle of it, that's going to be really good. And I'm not going to try and save dimes to lose out on dollars. And that's sometimes, I think, a point that's missed because I'll see people will say, oh, I missed 16. Well, it's at 16.15. If the stock's still acting as expected, and it's maybe going to go to 19, I'm not saying who cares, but I personally don't care about 10 or 20 cents if I can make $3 on it. So I guess that's sort of my thought on entries. And I wanted to go over specifically how I start looking for entries both on a daily and on a intraday basis. So here's an example, AKS, it's a daily chart. This is a falling wedge that we have here. And this chart is actually from yesterday on this. So I think it gave a little bit back today, but it's kind of just hanging out right where the breakout was. But, again, a nice example of a chart pattern that's taken several months. This stock had a big run up, and it's just got to consolidate. They just, don't often go straight up. So the stock is giving some back, and it's consolidating, and it's starting to break higher and break out, which is what we like to see on that. So on a daily basis, that's what I'm looking for, is the moves through resistance and through those chart patterns, or vice versa if it's something going to the downside. Now what I do on my intraday chart, so I start out by looking at the daily charts to look for my chart pattern setups. What I like to see on my daily charts then, and I should have probably, well, I guess I've got AKS. We can look at the 60-minute chart on that. That would have made sense. Hang on. So here's AKS. It's the top middle chart here. I hope everybody can see that, hopefully. I guess if nobody's saying they can't, I'll assume you guys can. So here's a 60-minute chart on it. So it's moved over to my Thinkorswim platform because it's high on my list. And what we're looking at here, you can see the resistance. This blue, the light blue line, is my 50-period exponential moving average. And that plays a really big role for me in my trading. I start out looking at a larger time frame, the dailies, looking for the chart pattern setups. Then what I try and do is move over to a smaller time frame. That next time frame for me is the 60-minute chart with the 50-period exponential moving average. And what I want to see is for the stock to move above that moving average, and then for that to start trending higher and continue to act as support as that stock moves up. Now I'll also start drawing in trend lines as well, and it certainly doesn't act perfectly all the time, but it can be very helpful. And on my next example here in my PowerPoint is a 60-minute chart of GOGO. And so we were watching this. you know, in the swing trade chat room, and you can see again how you can start drawing in, or at least how I start drawing in my support and resistance, because it helps me get points of reference to either trade this intraday or to take it on a swing base for overnight or for several days. And so you can see that the stock continued to set higher lows here on this lower trend line, and my resistance was clear here in the $22 area. So that's what we were watching for. And this could have continued to consolidate, you know, tighter and tighter until it finally broke out, but it didn't. It went ahead and broke out and broke higher over 22. So there's your swing entry. This other stuff inside here would be more intraday stuff for me. But there's your swing entry, and you can see that as this stock chops around, what happens with this 50-period exponential moving average is it starts to flatten out. It goes from being in a strong downtrend, which it was, to flattening out. And that's what I really like to see, is the stock starts to chop around. It's trying to find a bottom and spend some time consolidating. This exponential moving average starts to flatten out, and then finally what we get is the price starts moving above it, and this moving average starts moving up, and that's what I really like to see. And in this case, we have nice volume confirming. And this chart's from yesterday as well. So, and you can see that it came down, consolidated a little bit here, and came down and is testing this 50-period exponential moving average. You know, what we want to see is for that to lift off and continue higher. I have an example here on the downside as well with Tesla. And again, this is my 1-hour chart. So what I'm looking for is that change of trend on that 60-minute chart. That's where I am really trying to get not the exact bottom of the move, but either looking for the break of resistance or for that change of trend to help confirm what I'm seeing on the daily charts. Here's an example of Tesla, and I don't have the daily chart here, but this is just a 1-hour chart. So I wanted to show you here again how that 50-period exponential moving average on the 60-minute charts can be good. And again, it's what it helps me do is it helps me see the trend. It helps me confirm that the stock is either trending up or trending down, or that it's not trending at all. And what I'm trying to catch is those changes of trend either on the upside or on the downside. So here with Tesla, in this example, on the hourly chart, we've got a triangle pattern in place. We've got a lower high set. It continues to set lower highs. And then what we have in this chart's from yesterday as well. So I'm just using it for illustrative purposes, or actually from the day before. This is from, let's see, this is from Monday. The one on the right is from Tuesday. So we have a break lower of this 50-period moving average, and then you can see the next day that it came up and retested it from below, which is often for me, you know, a very decent risk-reward area to initiate another short on this, and then it fell lower. So again, you know, and I'm watching this as well. I talked about it and charted it in Swing Trade Chat Room again today. It came up to this 243 area intraday as well again and rolled lower. So, you know, and it doesn't mean that it won't eventually go higher, but I'm just explaining my thought process that, you know, as long as this stock stays below this 50-period exponential moving average on this particular time frame, you know, I'm thinking lower until that changes. And same thing with the go-go chart, you know, as long as it stays above it and continues to trend higher, I should be thinking long biased on that stock, not short until that. You know that I'm a bear at heart, Nate. I've told you that before. I just know that we're in a bullish uptrend in the market, so I've tried to be flexible in my thinking. So, anyway, okay. So those are just a few examples of with my entries, what I'm looking for. And then from my 60-minute charts, and I did a little bit of this today in the Swing Trade Chat Room, I tried to give some examples with LinkedIn on a 5-minute chart. So I start out with my dailies, then I look at my 60-minute charts, and then I can go, depending on my time frame that I'm trading, because I do day trade as well as swing trade, you know, I can move down to my 15-minute chart or my 5-minute charts if I need to. It's rare that I use a 1-minute chart to trade off of. So anyway, that's how I look for my entries. trying to find that trend change either up or down using these 60-minute charts to help me. And then also to confirm that, yes, the stock continues to act as I expect it to. So my next thought there, risk in managing the trade. So I'm just going to talk a little bit about my thoughts here, and then I do have some more chart examples to hopefully explain what I'm talking about. And I do get asked a lot, you know, how do I manage my risk, or where do I use a percentage or a dollar amount? And I guess before I get to that, let's just start from the beginning. So you've got to have a stop point. Whether it's mental or hard stops, you've got to keep your losses small. Do not average down. I tried that a lot when I was a new trader. I thought that if I bought something and the price went down, that if I bought more, it would be better, and that was not a good strategy. So don't average down. If you buy something and it goes lower and you haven't gotten stopped out of it, I would not suggest, you know, adding there. I would wait until it confirms what you're seeing and then add once it's moved higher. Hope is not a strategy. And if you are a trader, please remember not to turn your trades into investments. That often is another, you know, mistake that new traders make, is they just think, well, I'm just going to hold on to it for longer. And part of the problem with that is when you have losses and you don't take them, it's hard emotionally to move forward in your trades, because every day you log on, you're looking at the big giant red loss that's in your account from a trade that you're turned into an investment waiting to make your money back on it. And I know through my own personal experience that it is much easier to cut your losses and just move forward. Learn what you did wrong. I'm not saying forget about it, but don't dwell on it. So, I think that learning to take losses is one of, you know, really the hardest parts of being a new trader, or, you know, being a trader in general, because you have to be okay with being wrong. You have to admit that you're wrong, and that's hard. You know, you've got to just move forward from that. And if you can't admit that you were wrong and it was your mistake and figure out what you did wrong, you're going to have a bumpy road. So take your losses, keep them small. You can always re-enter the trade. You know, if you take a loss or you get stopped out on something, you know, don't be mad at the stock or hold a grudge. If the stock sets up again and does what you think, you can always re-enter the trade. So to me, I guess I'd rather be stopped out of something and have a little loss on it than hold and have a bigger loss and wish I'd gotten out sooner. If I get stopped out and have a small loss, I can always re-enter that again, and I know that. So that's something I've worked a lot on. Dwelling on your losses is a huge drain of emotional capital, and it really is. You cannot play the woulda, shoulda, coulda game. You know, understand what you did wrong in the trade and hopefully learn from it. And move forward. If you continue to think about those losses, it's going to make it hard for you to move forward in your trading and trade profitably, because you're going to be trading scared. So learn from your mistakes and move forward. Don't keep thinking about them endlessly. And it's hard when you lose, you know, money. It's especially hard if you lose, you know, a fair amount of money, to not dwell on it. But again, speaking from experience, it's not going to help you. So I will talk about how I manage my risk. So for myself, I don't have a set dollar amount or a percentage, because for me, I am buying specific chart patterns, or I'm buying support or selling resistance. I'm buying trend lines. I'm buying normally very specific areas, and I understand why I'm getting into the trade. So that being said, I tend to keep my stops pretty tight. Like I mentioned earlier, you know, I would rather be either right or right out. I can rebuy again, but if I'm wrong, I don't want to stay wrong for very long. So, and I, you know, again, I have losses just like everybody does. And I will say that in my trading, I think sometimes, I mean, I tend to be in and out, in and out, in and out sometimes on a stock, because those stops are tight. I want to be right. I want to make sure, you know, if for some reason it's dipping back below that breakout area, that I'm not sticking around, because I think that that breakout area should hold. That's just my personal preference. So if I'm wrong and it falls below it, I can reevaluate. And if it pops back above it, I can rebuy again. I don't Try not to hold a grudge. I used to hold grudges against stocks, and I'd try and get even with them, and that didn't work out very well either. So I just try and reevaluate what I'm seeing in the charts and wait for confirmation. Excuse me. So, and in doing that, like I mentioned earlier in the chart examples, I use those 60-minute charts with the 50-period exponential moving average to help confirm that if I'm swing trading something, that it continues to move higher, it continues to act as expected, that it's not changing that trend. And then I will draw in my support and resistance lines to help me manage the trade. So basically, I continue to ask myself, is the stock acting as I expect it to? So those are my thoughts on risk and managing the trade. And I wanted to give some examples here. So here is the example of FNMA. And I cut off the very nasty move that it had the other day because I wanted us to focus on the good and not the bad. So here I have the 60-minute chart with the 50-period exponential moving average acting, and this stock is acting well. And on the daily chart here, 350 was the breakout for this. And you can see here that even before the breakout happened, that this stock moved above that exponential moving average and retested it a few times, and then this exponential moving average starts moving up with the price. And this is a great example of how, you know, this exponential moving average worked very well in this example for quite a while if you were swing trading this. That being said, obviously the news that came out the other day, you know, it had a very nasty move. So, you know, you need to have stops in place and manage that. But if you were in this exponential moving average can help you see that, yes, this is continuing to act well. And you can see here that as this moved up and moved, you know, if we had the RSI on here, probably very overbought at this point. And at that point, this moving average was well below the price of the stock. So it needs time to consolidate. So just because the stock moves up and gives back a little, as long as I see that this exponential moving average continues to move up underneath of it, and that this stock is mostly going sideways and consolidating, that's really healthy, and I like to see that. You know, and that doesn't mean that you couldn't take a profit here and let it consolidate for a week or 4 days or whatever it spends going sideways before getting back into it. But just an example there of how I use this to help me manage my trade and to help me see if it's still acting as I expect it to in my swing trade. Okay. All right. I wanted to give this as a next example because we had this one in Swing Trade chat room several weeks ago, and I posted this in there as well. And so I should have probably gone a little further back to the left so you guys could have seen that this was in a strong downtrend. You can see, again, the flattening of this moving average and the sideways action and consolidation of the price. I drew in my resistance line here and how this started moving up right in this area and then started trending higher. And again, it makes a nice move up, you know, and then it acts very healthy. It consolidates, comes back down, tests that, moves up. You know, you can see here, I mean, once in a while you're going to get a little move, you know, below that. And that is, you know, a personal choice. What I typically do is as these move up, I will start drawing in my areas that should be support as the stock moves up so that if I do get a little move below that, I may not get stopped out depending on where I've drawn my lines. But anyway, so this stock basically went from between 32 and 33 on the break all the way to 50. The whole time acting as expected. So again, just another example of how that can be helpful. You know, and then obviously here, you know, it went parabolic and moved down, and it actually retraced all the way, I think, down to 40 if I remember right, and then bounced and moved higher. So, you know, just an example of how with swing trading for myself, it doesn't mean that I catch all of this move, but how the exponential moving averages can assist me in determining if my swing trade is acting as it should, and am I still in it? Should I still be in it? Here's the daily chart on this as well. I should have probably had these two charts flip-flopped, so sorry there. On the daily chart though, you know, so what I was seeing was I was seeing a positive divergence here, a higher low on my price, a positive divergence on my MACD, and then I rolled over to that 60-minute chart. So I actually pulled this from my stock charts list. It was one of the ones I was watching, and I liked what I was seeing here, and when I flipped it over to the 60-minute chart, that's when I started watching it. And then you can see on the daily chart here why when it moved through this $37.50 or $38 area, why it probably went as far as it did, is it just didn't have any resistance, and those things just take on a life of their own, you know, and maybe it had news as well. I don't remember, but anyway. Whirlpool, just an example of something that this was from, let's see, I think this is yesterday's chart. Yeah, this is yesterday's chart. How, again, a stock that moved higher and then started trending higher with that acted really well. You know, you could catch a nice, you know, 8 or 9 point move off of this, and then how the stock has broken below this, and this exponential moving average appears to be starting to roll over and move down. And I have this, I think, let me look, I think I've got this intraday as well. Well, I can put it in for you. So the upper right corner is Whirlpool today's chart. Yesterday moved below it, is retesting from below. So, you know, and a lot of times they'll do that. Just like on the upside, it will break above it, come back and retest it. You know, when these things break lower, and if it's going to start trending lower, it'll also often come up and retest this from below. So, you know, a decent area, risk reward with a tight stop to short sell something at that area for me. So, and then I wanted to have this example in here in talking about managing trades and risk and using stops and why you shouldn't hold a grudge. So in this example with FENG, how sometimes I'm in, out. Sometimes it takes several tries for this breakout to stick. And in this example, it broke out, fell back down below, broke out, fell back down below, and then finally made the move. So, you know, unfortunately, the stocks don't always act perfectly. And so you have to just try and be, you know, persistent if it's still a trade setup you're interested in at least monitoring it or keeping an eye on it to see, you know, if it's going to go ahead and go here. Because this one was a little frustrating on, at least for me, on the break below, back above, break below, back above, but it did finally go for a nice 2 point move there. So, all right. And then lastly, I wanted to talk about exits. And my thoughts here will be short because exits are the hardest for me. So just in talking about swing trades, obviously they can be anything from overnight to several months. For myself personally, my time frames tend to be overnight to several days or maybe a few weeks. And when I take profits varies a lot. And it depends a lot for me on the size of my trade. And also, I will say, on how quickly the profits come. If something makes a big move and I have size in it, I tend to want to book those profits pretty quickly. And I can always reevaluate. I can always re-enter a trade. I think sometimes as newer traders, you know, you think that once you've taken profits, you're just done and you should never trade it again. And there's nothing wrong with booking profits and letting the stock rest or set up again or enter again if it continues higher like you thought it would be, but you're never going to go broke taking those profits. So, yeah, I guess so. I have a really hard time explaining exits to people or how I do them, and I've thought about this, and I thought, you know, I probably really need to spend more time trying to figure that out, but it really is for me dictated on the size of my trade, you know, the chart pattern. Is the trade acting as expected? How quickly are my profits coming to me? And then also knowing that even if I take profits, I can get back into the trade again, which I often do. When you look at those 60-minute charts, if I get a big move quickly and I know the stock is oversold on a short-term basis, I will often book those profits and let it set up again, and then I can enter the trade again, because if it's going to set up for several days, I can be busy trading something else and not feeling frustrated because something else that I've got my money tied up in isn't moving. So I will say that taking partial profits is a great way to help you keep some skin in the game. I am not very good at that at all. I am usually all in or all out. It's how I've always been. Probably not going to change that. You know, hard to teach an old dog new tricks. So I know that that's a really good strategy. I know a lot of people use it. I think that it's a very good idea. It's just not one I am good at. So anyway, so exits. I think it's, you know, a lot of personal preference. So I think too, for myself personally, you know, sometimes I get impatient, you know, because especially in this market, there's so much moving, you know. So I sometimes have a hard time, you know, sitting really still. If I get a lot of profit quickly, you know, I want to book it and then I can be back in it. So anyway, so I've got a couple of examples of things that help me in looking for where my exit's going to be. Since that is the hardest thing for me, what I do often try and do to help, besides using those moving averages and my trend lines, is to look for areas of resistance that may make sense to book profits. So in this example, CISG, it had resistance in the 9 to 950 area on this daily chart off of the breakout over 7. So I didn't play this trade in particular, but it is an example of how you get a big move very quickly, and how that would be an area that would make sense to me to book profits and see if the stock sets up again. So there's one example of how I'll use resistance areas to help book profits. If you look, you know, a lot of times I've said in the past, look to the left to help you see the right. You know, and if you're looking at a daily chart and you can't see the price action because you don't have enough history to the left side, you know, if you're looking at a 1-year chart, try looking at a 3 or a 5-year chart and mark those areas of resistance down, because a lot of times, you know, I'll see, you know, something moves to that resistance and everybody's like, why did it stop there? I'm like, look at a bigger picture. You know, it went exactly where it was supposed to go. So anyway. On this ATHM example, I just wanted to use this for illustrative purposes of how, again, you could manage the trade and how you could possibly look for exits. So here we see how it changed trend, starts moving higher, and really it respects this 50-period exponential moving average very well. So in this example, though, here, you know, it really goes parabolic and makes a big move higher. If I was in this here, definitely would have been booking profit somewhere along the way, because it's so far above the moving average, and if I had the RSI on here, probably very overbought short term. So and you can see it does come back down, and if you had been in this and it went from 45 back down to 39 or 40, you'd probably be having heart failure. But it comes back down to the area that makes sense, and it sets up again, and then it moves higher. And at this point, you know, we've looked at the daily chart on this. It had a really big move, and so at this point, what I would be looking at and doing is if I was still in it, or if I had initiated a new trade in it, I would be drawing this shorter term trend line to really help manage it, because it moves so fast. So if you had been in this, you know, on this move back off of here, this is what I would have been doing to help me try and maximize the profits that I was making, but also make sure that I was getting out when I needed to. And you can see there that the break of that short-term trend line of that 2 days there was important, because it went from 50, I know this went all the way back to 40. So anyway, just another example of the things that I do to try and help me manage the trades, to try and help me, you know, find areas that make sense, or what I do to, you know, in this example, how I draw my trend lines, my support lines, to help me stay in the trade, and then to help me get out if that trend line starts to fail or break. So, and then just an example here that I wanted to throw in of why, you know, in talking about exits, that you need to have stops. And here's an example that I had, and I think I'd even tweeted this out. The stock had broken higher, you know, and it was a long-term downtrend line, and it perked and it looked great and it had volume when it did it, and it completely failed. And I don't know where this is at today. I didn't look. But, you know, for me anyway, it's really important that if that trend line doesn't hold, I'm just out, and then I'll reevaluate. I can get back in again. If it wants to go higher again, then that's fine. But it's just really, really important to keep those losses small if you want to stay in the game to play another day. It's much easier to have a small loss than to wait 2 more days and have that loss be bigger, because then you start playing the hope game, the hopium game of hoping that it's going to go back to where you bought it, or you hope it goes back to where it was yesterday, and then you'll get out. And it's just easier to cut those losses and move on. So let's see. I know I've got some, I haven't looked in chat. Let me look here. So I know I've got some questions I probably missed. Yeah, so measured moves there, Matt. You talk about measured moves, and for people that maybe don't know what that means, a lot of the technical chart patterns have possible price targets with them. Bull flags, triangles, all of those, if you read on stock charts, will explain to you how, when the pattern breaks, there is a possible price target measurement that comes with that. Now, it doesn't tell you if it gets there tomorrow or 6 months from now, but those often do play out over time. And so you can go to stockcharts.com and take a look at those if you're interested in them. But I do absolutely consider those price targets. And also then, like I said, like with that CISG, you know, look for areas of resistance for me to at least take some profits and then reevaluate. So do I enter stops while in the trade? If I'm sitting in front of my desk, my stops are mental. I know, you know, I'm watching my trend lines visually during the day, and I know where I want to be out. If I'm going to go walk my dogs or be away from my desk, then my stops need to be hard, so that if something happens when I'm not at my desk, that I'm covered that way. So, and I will also say, if you're not good about using your mental stops and getting out when you say you're going to, then I would suggest putting hard stops in when you enter the trade. So. Yeah, I've got one more chart, and then we can look at some other charts. So yeah, I've just got one more little chart for you guys, and then we'll move on. I know this is kind of a long one. Usually I talk less and let you guys ask more questions or ask more charts. So, so I think this is just kind of, you know, going over again what I look for. Primarily, most of what I do is technical. You know, 5%. I do look at float. You know, is it a low float? Does it have strong institutional support if it's something that I'm going to swing for a couple weeks? You know, I sometimes am interested in earnings or what their last earnings were, just to kind of confirm what I might be seeing if it's something I'm interested in swinging for a while. But most of what I do is the charting. I'm looking for the particular chart setups. I'm looking for support and resistance. And people ask, where do I scan? Again, I visually look through the list that I've got stored at stock charts. It's time consuming. It's probably antiquated like me, but it's just, I love looking at charts, and it's what I do. I do use like the percentage gainers list to help me find new setups that may work in the coming days. It doesn't mean I'm going to trade them the next day, but if I like, again, the chart that I see when I look, and I use that FinBiz site because I can look at the percentage gainers list in chart terms. So I don't have to like pull the list up and then go chart it somewhere else. They'll actually bring charts up for me, so I can visually just scan through it, and then I pull off the ones that look good to me. You know, I look for sector rotation when that makes sense to find new setups, and Twitter obviously is a great, you know, and chat as well. I mean, I pull ideas from chat, but Twitter's also obviously a great resource, you know, for me. I pull stuff from there all the time when it makes sense to me. I don't pull it just because somebody's tweeting it out, but if it's, you know, I'll look at the chart, and if it's a chart that I'm interested in, then I draw my lines in and, you know, hang on to it and watch. So anyway, and if you want to be a swing trader, you need to have patience with rules. So I think the biggest killer for all swing traders, me included, is we never ever have enough patience. And I say that all the time. When I look back 3 months or 4 months, I think, why don't I just go on vacation and put my stops in place, you know. And I will, I guess one other comment I would say also, if you're going to try and swing trade, or if you are swing trading, if you're going to watch every tick, it's going to drive you nuts. So I would encourage you to not stare all day long at your swing trades, because they don't always move. They spend time consolidating, and it's aggravating. So go either work on your day trade stuff, go scan, walk your dog, whatever. But if you stare at your swing trades tick by tick, they will make you postal. So anyway, that is it for my spiel. And we can look at Priceline. Let's see. So we will do, let me just set this up. So I'm going to switch it over to daily to start with. Maybe. We have to feed the hamsters at Thinkorswim. Okay, Priceline daily. So looking at the daily chart, looks flaggy to me. I would want whatever this is here, 13.15, 13.15. So we would want to watch that area as support. Then when I look at my 60-minute chart, you know, I mean, let's see, price level. And then we could do this too. So the daily chart looks bullish. But when I look at my 60-minute chart now, what I see is we have a high here and then a double top here, and now we've moved below this 50-period exponential moving average. So then that gives me some pause. So you could say, I always try and start out with the daily chart, because my thoughts on the stock change as I go from daily to 60 minutes. So what I would say here is that the other thing that I would consider in looking at this is, what is the market going to do? If the market continues to pull lower, then I would think this probably does go lower. But if the market is going to go higher, and then considering the daily chart on this, I would say maybe just a little false breakdown below this to suck all of us short people in, and then it goes higher. So currently, I don't see any trade in this, and the areas that I would be watching would be, so long biased over the 1375 area there. If you want to trade the stuff in between, that's great, but I would be watching these areas as support, and then a break over that. In between, we're just chopping. Zynga. And actually, I can do these more than one, since I have more than one chart. And ST. So these are both hourly charts that are coming up. Zynga, bullish, trending higher. Little flaggy there on the hourly on Zynga. Well, I'm switching it over to daily. So the problem here on Zynga is you don't have enough information to the left. So when I look here at this daily chart, this is a 1-year chart, should be. Yep. So when I look at this, and I know because I know this, I just don't have enough information. And what I mean is, I have no idea what resistance areas would be over to the left. So let's do this. So this is what I would do. So when I look at that, then I would immediately go here. I could do it on my platform, but it doesn't like to give me 4- and 5-year charts very well unless I look at weeklies, and it's not my favorite. So I flip over to stock charts, and I look at a 3-year chart. So here's a 3-year chart of Zynga. And this is what I mean by saying looking to the left to help you see the right. Because I didn't have enough information. Now that I look at this, again, above the 200-day moving average, it continues to trend higher. It's bullish. It's overbought short term on the daily chart. It's got resistance right around 6. And then above 6, I would be looking at 8. And then some chop between 8 and 9. If it gets above the 9 or 950 area, it's thin to 11. or just above 11, 1140, whatever that is. And what I mean by thin is it didn't spend very much time in this area. So typically when stocks move quickly through an area on the downside or on the upside, when it comes back to go the opposite way, again, it usually moves through that area quickly because there's not a lot of price memory there. So Zynga looks bullish. STSI, hourly chart, trending higher, kind of a double top looking thing there, possibly. But let's look at the daily chart and see how the daily chart changes that. So then when I look at the daily chart, I think, oh, that looks flaggy for sure. And it's moved above the 50 period or the 50-day exponential moving average. So the only caveat that I would say there, and sometimes these will flip up and go right away. You know, it may need to spend some more time here to get this moving higher, but I definitely would like that long over that 104, 105 area, 106. And if it moves above there, you know, the flag, if you measure that price target, is about a 40-cent move, 40 or 50-cent move, depending on where you measure it from, which would take it up to the 140 area. So I like that one. JPM. So we have a double top currently here at the 59, almost in just below 60. Down to the 50-day exponential moving average, but tailing off of there today. So, you know, again, you can just start drawing in your trend lines. And we can draw in resistance. There. That's the daily. Here's the hourly. And this is Thinkorswim defaults 20-day, 1 hour. Sometimes that's not enough for me. Again, I like to look to the left to help me see the right. And again, you know, you guys can all do this. Just draw your trend lines in and your resistance. You know, and they're not always perfect. Sometimes I always think, do I include the tail or do I not? Sometimes it works, sometimes it doesn't. So I would say, I mean, currently on the daily chart, it's bullish. The 60-minute chart, I mean, it's just chopping, and this currently looks like it's working. It's setting higher lows, and we have resistance up here, so I would guess more chop. It's an ascending triangle, and you'd be watching for the break over that $60 area. So chart requests, CISG. Okay. We looked at CISG in the webinar screenshots that I had, but we can look at it. So that's a huge move on that break over the resistance at 650, 675 area here. And I think this just had earnings, if I remember right. So it had some resistance there, and we can kind of, you can say, make a case for resistance there. It blew through both of those. But that's a big move. And then when we look at our hourly chart here on the right, you can see the exponential moving average moves up, and it's just way beyond that. When we look at the longer term chart on this, which I had, it had resistance at 9, not between 9 and 950 on the longer term chart here, right here, from the fall of 2011. It's got a gap there. It stopped right about at that gap. I think I had on my webinar, on my screenshots, I had resistance at 9. It was actually a little bit above that. So it's currently, as of today, stopped there. It's a big move. My thought here would be that it would be two things. It's overextended and I wouldn't want to buy it long here. I'd want to pull back. It has a ton of room on the upside. So I would still be bullish the stock, but it definitely needs to rest. So what we would hope for is that it would flag out. So if you're, you know, maybe it's a scalp short. And here on the 60-minute chart, you know, that's a steep move. You can draw your trend line in there if you're looking to short this. And I'm not suggesting that's what you should do. I'm just saying, you know, start drawing your trend lines in and use that as your guide. So the longer term chart here is very bullish, but it's very extended and it needs to rest, in my opinion. Doesn't mean it will, but that's what it should do. Heart. I do play IPOs. I don't typically play the first day, but I do like to watch some of them. A lot of the biotech stuff, you know, this year has come out, and some of it has kind of languished and then just gone ballistic later. So I think those are interesting. Sometimes with the IPOs, I mean, it's hard to know where they're going to go because you don't have the price history. So with this example, you know, it's flagging currently. So I would be thinking long biased here, and I would be looking for, and when it tails like this, when it, see, it's got this tail up to 1098, sometimes I have a little bit of a hard time. It's like, is the breakout over the 10, you know, 30 area, or do you say over 11? And so if I was playing this, I would probably be interested in long biased over the 10 or 1030 area, but knowing that we've still got the tail up there, so I don't know, that makes it a little hard. But we're setting higher lows, it's flagging. I would be watching for a move over the 1030-ish area on that. I actually like that one well enough, I'm going to write it down. So I will add that one to my list. And then we can look, you know, again, so you guys are watching me just do it how I do it during the day. I look at the daily charts. I look at the 60-minute chart. And here on Heart, you can see, so it's flagging. It has a big move up. It's consolidating. This 50-period exponential moving average is coming up below it. So, you know, it's acting as expected. And the, you know, the 60-minute chart's confirming what we're seeing in the daily chart. You know, and that being said, if something changes, I guess I would probably want the 825 to 850 area to support on that. If it breaks down below here, then I'm wrong and I would not be interested anymore. So, SQNM and PVG. I have PVG on one of my lists. It's been acting pretty well. Okay, so SQNM. This is the daily chart. So I would just start thinking in terms of this. And the other thing that I would also think in terms of is this. So we have a downtrend line that we would be watching for a break above the 260, 270 area, whatever that is. I'm not going to zoom in and zoom back out, but you can figure it out for yourself. So I would be looking for a break above that area as a possible buy point, knowing that if it moves above it, it's going to have some resistance here at the 278 area, because that makes sense there. I don't have it drawn in. And then it's probably going to want to move up to the gap. So that would be my thought there. And typically when it does that, unless it's news related, it will spend some time consolidating before it can move into the gap. But once it moves into the gap, then it wants to fill the gap to 450. So, and then the 1 hour chart on that. Yeah, so the 1 hour chart here, you know, again, you can draw, so it's going to have support at 2. So for me, looking at this, I mean, there's no play until it moves over this resistance line. That's where I would be long biased, is over that. If it doesn't do that, and you can see we've got support back at 2, if it moves back to 2, depending on what's going on with it, that might be, you know, a scalp area to consider a long, because that's acted as support before. So this probably just needs some more time, but those would be the levels I'm watching on it. PVG on the right here, this is the daily chart. So, you know, a nice example of how the stock moves higher, it comes back and consolidates and retests the moving average, moves higher, comes back. Should be getting ready to move higher again. 7, I would call 7 for sure the break on this. It's setting higher lows. We like that. 7 is definitely the break. A move through 7, the next resistance I see is 8, and then after that, 9, and then 10. I could draw lines at all those areas, just, you know, looking really quickly. I'm not just saying it because they're the round numbers. That's where I actually see resistance. So obviously 7 here-ish. You know, I would see resistance right in this area. You can see 9 because we've got a tail there, and then we've got some consolidation, you know, and then just above 10. So I like that one too. And the 60-minute chart on it. Whoops. You know, and again, so you just start drawing in your trend lines. And so on the 60-minute chart, whoops, on the 60-minute chart here, you know, higher lows, and we've got resistance. So it's ascending triangle. So you're watching for that break over 7. And in this example, I understand that it's got a little tail over there. And that's always a little bit hard for me. It's like, is it 7 or is it 7.15 when it does that tail? And so for me, I would buy the break over 7, but I would understand that it tailed at 7.15. Sometimes they have funny moves. So anyway, okay, Groupon. But I like that one too. I would be bullish on that, and those would be my levels. Groupon and BBAX. Groupon had a lovely long-term daily chart until earnings came out, and then it got wrecked. So Groupon, I'm not even going to look at the daily chart because we know that it fell back below all of its important moving averages, if I remember correctly. However, and what I will say is when the stocks gap down like this, you know, a lot of times there's some, you know, initial scalping opportunities that are there for those of you that like the quicker trades, and that's great. But it takes time then for these things to form a bottom. Sometimes people think, oh, they're just going to turn around and go right back up. And it's not often that that happens. I'm not going to say never, but after this initial move, this is what we typically see as we get chopped for quite a while this thing tries to form a bottom. What I do like here, and so you can see the moving averages come down, it started to flatten out, and the price is perked just above it. So that's interesting to me. I would be looking there and there. And then obviously there. So you see what it's just very simple. I know one thing I forgot to say is I would really encourage everybody who trades, if you're interested in charting and you like technical analysis, to spend time drawing lines and charting. It really does make you a better trader. And I would encourage you to put your charts, your swing charts, in the Swing Trade chat room. And this is why. You know, I know that it's hard to put stuff out there, and I know for me, when I first, you know, joined Investors Underground, I would put, you know, my thoughts in chat, obviously some, you know, but it was hard, especially like when I started doing my blog and out on Twitter, to put stuff actually out there, because it's, you know, it's just hard because all of a sudden you're vulnerable and everybody out there is looking at it. But this is what I will tell you that I know has helped me. It's made me a better trader. And the reason that it's made me a better trader is because you're doing homework while you're doing this. It helps you see the setup. If you will spend time charting and then be willing to put those setups out there, it's okay if you're wrong. I'm wrong every day. But it will honestly make you a better trader because you're spending time doing the homework. And the other thing I think that it helps is it helps you become a sharper trader, because if you're willing to put it out for everybody else to see, you're going to be more critical of the setup, and I think sharper in your trading, because, you know, is this really what's going on, or am I just buying this because I think it's an okay area to buy, or is it really an area that makes sense to buy? So anyway, okay, so Groupon, those are my levels. DBAX, everybody hear me okay? Somebody said I was cutting out. My hamsters are tired, I think. So here's the hourly chart on DVAX. Again, I can draw and it's doing higher lows. The daily chart. That daily chart's a little harder. Sometimes the charts just don't line up as well, I guess, to my eye, is what I would say. But I would sort of be looking at that. I'm a little suspicious in looking at that because that moving average is getting a little funky, a little weak. I would definitely want that 170 to 180 area to support. And I would be, it's setting lower highs and currently higher lows. So maybe it consolidates and then breaks higher, but those would be the ranges that I would be watching on. So, okay, SRC. SRC and CDXC. On Groupon, do we need more volume to speed up price? Yeah, I would agree on that. So when the stocks are consolidating like that on the bottom, what you like to see is to see the volume contract. Because what that means is your sellers are tired and they're done selling. You know, it's the same thing in those bull flags, that when the flag portion, the flagpole is the big move up and then the flag is the consolidation, you want to see the price contract there. So that means that your sellers are gone, your buyers, you know, are waiting for the chart pattern, and then as things move up and move out of those breaks, whether it's moving through resistance levels or moving out of your chart patterns, it doesn't mean it always happens, but what you like to see is to have the volume come up as those things move out because it helps confirm that what you're seeing. I sometimes am suspicious, and I know with FNMA, before it moved out of that 350 area, I'd been watching that as well as everybody else had been for a long time. And I was getting a lot of questions because it would start to move up and it would look like it was going to go. It would move up to 330 or 340, but I kept watching volume, and volume just wasn't really confirming. You know, volume was not confirming those moves, and those were my thoughts when I was talking about it then is, yes, I'm tempted. Did I toe dip a couple times? Yes, but, you know, volume just wasn't confirming that it was actually going to move, you know, until it moved over that 350 area. So, so Groupon, you mentioned Groupon was trending bullish before it tanked after the earnings. I never hold to earnings, ever. So, I don't have an answer. You would have to refer to your trade plan on that. I used to try sometimes to hold to earnings years ago, and it just never, ever went in my favor, I don't think. So I just don't hold to earnings. It's too much of a risk for my taste. And so if you held to earnings and it's tanked and you still have the stock, currently it's looking a little more hopeful, but you know, that's up to you as to whether you're turning your trade into an investment and you want to continue to hold it. You know, it could take time for it to come back, or maybe it gains a little, but I just don't like holding to earnings, and that's a great example of why. It just seemed like I could never get one that would go in my favor, or rarely. So I just steer clear. Okay, SRC, daily chart, bullish. We're setting higher lows. Has resistance at 11. Has retraced back to the 50-day exponential moving average. So I would be long biased here, meaning I'm interested in being long this stock on a move over 11. And then obviously the next resistance would be 12 on that. So I would be thinking long there. And the hourly chart, we'll see if it confirms. So on the hourly chart, I mean, you can see that it's retraced some, and it's always interesting. So the daily chart, everything looks pretty good, and it still looks bullish. And on the hourly chart, you know, it's actually broken below here, trying to move back above it, the 50-period exponential moving average. So, you know, sometimes there's some, you know, conflicting signals. And in that case, you know, I just would continue to watch this 11 or 11.05, 06 area. Until it moves over that, it just wouldn't be something that I would be interested in playing, because then you're just guessing. CDXC, daily chart. So that's a pretty big tail today, you know, on some volume. Sometimes these lower cap, you know, real small cap stuff, I'm not as, their charts are not as clear to me, I guess maybe is what I should say. Still above the 50 period exponential moving average though. I will say that this 180, or excuse me, 190, 193-ish area was the breakout, and it didn't hold that, so I don't like that on a 60-minute chart. Let's look just real quick on the longer term chart to see if that helps me see anything different on it. So this is a 3-year chart. And we can look at a 7-year chart just to see if that changes anything. So on the 7-year chart, when I look at this, oh, this is over the counter too. Okay. So on the longer term chart, these are not my specialty for sure, but I'll give you my 2 cents on the chart. Just above 2 here, whatever this is, 210 or 215 on this longer term chart. If it can get above that, then there's really nothing. So that would be the area I'd be watching if you're interested long in this. But those are definitely not kind of my thing to play, so I'm not a great one to ask them. RIT. RIT and EQR. So RIT, I know we're going to have to pull up the longer term chart on that, because that is one that I'm familiar with from days gone by. That's a hard one to look at though. Just a second. Let me do 3 years. So RIT, 3-year chart. Definitely has spent some time, you know, months consolidating here in the 170-ish, you know, 150 to $2 area. It's below the 200-day moving average, so if it does move up, it should have resistance at 250 there. So that would be, if you're looking to long it, you know, that should be as far as it gets, and that's resistance there until it can move through there. And then through there, it's got some resistance at 3, and then you'd be looking at 5. So, so there's the daily chart on that. You can see the resistance there. And it had some volume coming into it today. I think you guys were playing that over the momentum chart. I think I saw somebody post it. So anyway, might be interesting. EQR, hourly chart. Bullish uptrend, and then kind of some choppy topping action possibly here. But let's look at the daily chart. It's moved below that 50-period exponential moving average, but popped back above it. And again, so on the bottoming action on the 60-minute chart with that 50-period exponential moving average, it will move above, below as it chops sideways before everything starts turning up. It's the same thing when stuff is topping. You know, you'll get the tops and it'll move above, below until that finally the price and that moving average starts falling lower, if it's going to start trending lower. So that's to be expected. The daily chart here, though, is actually bullish. It fell a little bit below, but then had a nice candle today. So I would say that I wouldn't want it to be below the 57.50 area. It tailed there twice on the daily candles. That needs to hold. And if it holds, if it can move above the 59.40-ish area, I would be long biased. Blue. GE and blue. Oh, I can tell you blue. I looked at blue today because I moved that over. So blue has resistance on the daily chart at 6, on the longer term daily chart at 6. And I'll pull it up for you just a sec. So that's a 3-year chart. That still doesn't give me enough information. But the longer term chart here. Oh, maybe it's even way longer. Okay, yeah, so we really have to look at a long term. I mean, this is a 9-year chart of blue, which I didn't have to go back that far. I could have done 7. But again, this is why, for me anyway, it's important to have all the information to understand where the price could be going. Because if you look at this and then we look at this daily chart of it here on the right, for me, when I look at this chart on the right, it's really hard. I mean, it's obviously bullish, but I have nothing to compare it to on this left side. I have no point of reference. So for me, anyway, that's really hard to see that. When I look at this, I go, oh, well, 6 or, 605, whatever that little peak is there. That's a big break. If we can get above 6, then we have a very thin area from 6 to whatever that is, between 9 and 10. So that actually is that on my platform. I'm interested in that, over 6. GE, daily chart. Broke the 50-day moving average, moved back up to test it from below, and has actually moved back above it now. Kind of looks flaggy. I don't know. I might be stretching it there to call that flaggy. But let's look at the hourly chart. So the hourly chart, we can start drawing in some trend lines. We've got some resistance right there, which is hard because there's not another point of reference really to compare it with, but it's recent, so I'll put it in there. So I would watch the lower trend line for support on any retracement, and I would be looking for it to move above this recent high if you were interested in longing it. In between there is just chop. We can look at the longer term chart of that just for fun. That's a long-term chart of GE. So, and obviously this is a slower mover. Bullish uptrend. It's above the 200-day moving average. Above, if it can move on this chart, if it can move above, I know that's not exactly 28, but I don't know what it is without looking closer. So 27.80, whatever that is. If it can move above that, then it's going to want to go to this 30, 31 area, and then above that, just above 32. So still bullish. Nothing's changed. Slower mover, but that's fine. Okay, I think I got everybody's chart. I missed something. Go ahead and put it in. Anyway, so what you guys saw me going through with the charts that you requested is just how I do it. I mean, I look at the dailies. I look at the 60-minute, because depending on the time frame you're looking at it, it can change your opinion of the charts. And it's important for me in my swing trading to try and have a full or complete view, hopefully, of what the options are. And I always try to be flexible in thinking, well, if it's bullish, it does this, but if I'm wrong and it's bearish, what does it do? So anyway, those are my thoughts. I know it was a really long webinar tonight. We had a lot to cover. So I'm happy to take other questions or other chart requests if anybody has any. You guys aren't sleeping on your desk right now. It could be. Okay, if nobody has any other questions or charts, oh, somebody's typing. If you want something, you got to get it in there, or I'm gonna shut her down. But if not, an example of a stop on good. Sure. So let me look at the hourly chart on good. I am not in this. I'm watching it, just so you know. So I haven't thought about where my stop would be exactly. I probably, sometimes I anticipate a little bit. So, I'm not in this yet. I'll probably wait till it gets closer to 6 before I am interested in it. So there's the lower trend line support. You can see that this what is this, 521 area was some resistance, and it did finally move higher through that. It did have some kind of chop in there. So, you know, depending on where you're at in this, that's one area that I definitely would want to support is this 520-ish area, you know, give or take a little bit. If you like to have a tighter stop, again, depending on where you're at, I would be looking there next. You know, it depends on how much room you want to give it. So, you know, for me, since I would be watching that 6 or 610, I'd have to see exactly what that level was. It looked like it was just a little over 6, but we'll just call it 6 for purposes of discussion. You know, if I initiate a trade and maybe I toe dip at 590 and it moves over 6, you know, my stop would probably be 580. I mean, that's how close I usually trade those because I want it to stick. And if I get stopped out and it moves above it again, I'll just buy it again. I just either want to be right or right out. So that's my only, yeah. Yeah, so for me, with blue, you know, it's definitely trending higher and it's bullish, and it doesn't mean that you have to wait till 6, but for me, I prefer to try and play those breaks because it seems like sometimes before the break actually happens can be frustrating because this stock, and I'm not saying it's going to do this, but sometimes because 6 really is the break, it might take it a while to get there. I mean, it could get there tomorrow because I know some of the chat rooms are watching it and it's coming up on the radar. So that changes it, and I understand that. But also sometimes it will go to 590 and then it may come back to 560. It may spend more time chopping around before it can break through that $6 level unless the momentum traders get a hold of it or unless it has news to change that. So those are my thoughts on it, and it doesn't mean that you can't play it before the breakout. I just think you need to understand that 6 area is actually the break, and if you're playing it before, you either are buying it with a longer term view and you have a stop that fits your trading plan, or, you know, in this case, I mean, if I was going to buy it now anticipating the break, that would be a big anticipation. I would buy it and I would probably have that 510 to 520 area as a stop. So, or you buy it and just are willing to wait, you know, maybe it takes another week for it to go. For me, that time frame of waiting is frustrating because sometimes then I second guess a little bit. So for myself, it's more constructive in my trading to actually trade the breaks. Again, understanding I'm not getting the exact bottom. I'm not getting the best price, but for me mentally in my trading, if I buy that break, knowing it's important and that I should get a big move through there, and it should move more quickly because everybody's watching those levels at the technical level. It should move quickly, and the profit should be greater and more quickly than grinding around on 50 cents. You know, waiting for a week or 10 days, or, you know, I'm not saying that's how long it's going to take, but a lot of times that's how those play out, is they will take longer to set up and to get to that breakout level, and I just don't like waiting for that. I'd rather be playing something else that's moving, and then when this is ready, then I can play it. So that's just how I choose to. So. Yeah. So anyway, that's how I do it. Doesn't mean it's right or wrong. It's just my personal preference and what works for me, because I just get frustrated with that chop waiting. So I don't, like I said earlier, the meat of the move, I'm fine with that. If I can get the middle, I'm happy. I might complain a little bit, but generally I know that my profit and loss is happy with the middle. We always strive to try and be perfect, and it's just not realistic in trading to be perfect all the time, or hardly ever. Joe's daily chart. So this is interesting. This is an oldie from the past, I know. So the daily chart here, bullish, and I like, again, that's a really nice rounding bottom, and what it's actually doing here, or what it may be doing, is kind of forming a handle, so you get the rounding bottom, and then you end up with a cup and handle. So I like that. You know, it's a little funky. It's like where, I think resistance is there where I drew it probably. 150 to 155 in that area. So again, I like it. If I was going to play this, I would wait for the break. You know, it doesn't mean that you can't buy it before, but for me, you know, that's the level I would be watching for the break, because in between you're either scalping, if you're good at that and that's what you choose to do, or you're guessing. And I don't like to guess because it's frustrating and it costs me money usually. So, but I do like that chart. That's definitely, you know, that's definitely a nice setup there, or potential setup, I think. So anyway. All right. Any other questions or charts? Okay. Well, I hang out. I mean, I'm in both chat rooms, but I do all my posting now in the Swing Trade chat room. So you guys can have both chats open if you want to see what we are doing over there. We're a little silly once in a while, and it's a lot. You know, we're a lot quieter. It's a slower pace. I try and put some of my thoughts in there and my chart setups, and I'd love to have more of you brave souls come over and work on your charting over there. We don't fight. And like I said, I promise that if you will do that, it will make you a better trader. It will really help you in your trading. It takes time, but it will make a difference. So come check us out. And if you have questions, I'm always there to help. If I don't answer right away, it means because I'm not staring at my swing trades every minute. I might be out walking the dog. So anyway, yeah, I don't have a watch list tonight. I do my updates on my blog 2 or 3 times a week. I did one last week. And all of my thoughts from today are in the Swing Trade chat logs. I usually do try and put what I'm watching for the next day in there. Those are in there. If you want to check out what I said today, go to the Swing Trade chat logs and you can read it there. So, quick question. Sure. Somebody said quick question. So if you have a quick question, I'm happy to answer it. I know, and Nate's already posted, you know, Nate does watch lists every night, so I think he's already got his posted. So your question is on glue. G-L-U-U. I do, so again, remember that, you know, swing trading, I mean, I do both. So I think I'm kind of like a hybrid trader. That's kind of a new term. I am a hybrid trader because I do both. My swing trade in something like blue, I always go back so that I can see. I mean, if I can go back a year, if I can look at a 1 year chart and get a good view of where it's going, then that's fine. If I need to look at 3 years, I look at 3 years. If I need to look at 6 years to get a price reference point, then I do. So I'm trying to look for areas that make sense so that I'm not guessing about what price is going to do. But that's just me. So for me, that $6 area should be important. And it should be a big break. And then obviously above that, you know, it's thin and it could be very quick. In the meantime, I'm going to choose to try and trade some other stuff. And, you know, when it's ready to break, and if it does it tomorrow, then great. If it's 10 days from now, that's fine too. But that's just how I choose to do it. So, yeah, I do. And even on my 60-minute charts, you guys saw me tonight, the 20 days sometimes on a 60-minute chart isn't enough. So I'll look at a 30-day 60-minute chart or a 90-day 60-minute chart to help me get in my resistance levels, the areas of importance for it to break on the upside if I'm going to be long biased, or to find areas of support on the downside if I'm shorting something, to see where it might make sense for me to take some profits and then reevaluate. So, IMRF. Yeah, I can look at IMRF. Other than just when we were doing some things. So again, it depends on how much information I can get off of a 1 year chart. What I will say is that, you know, a lot of these trades, so the CISG, the CAAS, some of these stocks that if you're a newer trader, I mean, I remember these stocks from years ago when, before everything crashed, the China stuff was hot, and these stocks have been quoted and they have been dead on the bottom for years. And they're all starting to move, they're all starting to take their turns, and they have a lot of room on the upside, but to understand the levels that make sense where they're going to go, you've got to look at those longer term charts. So that's what I do. If I can get enough information off of a 1-year chart for, I don't know, whatever, RMCI or something like that, then that's what I'll use. But if I can't get enough information off the left side of that chart to give me some resistance levels or some reference price points, then I'll go back further. So, so on blue, no. I mean, there's nothing in the chart that would make me want to short it. And again, when I say this, please understand that I'm coming at it from a longer term view, because I know that Nate and a lot of the people in the main chat, you guys are really good at shorting that stuff on shorter term basis. But when I say that, I'm looking at it at a longer term view, and it's just not. I do scalp short stuff, intraday or long it, in my day trades, but I try not to fight the trend. And blue is bullish and it's in an uptrend. So until something with that changes, there's nothing in the chart that makes me want to short it. There's just not. It's not a good risk reward, I don't think. So it would be something I would just leave alone and let it consolidate until it's ready. And so it would stay on my A or B list and my stock charts list. I would look at it every day or every couple days. I've actually moved it over to my platform because I am interested in it. Maybe it could move more quickly, and I want to make sure that I'm paying attention to it. So, yeah, so it would not be short for me, but that's just my style. It might be something that Nate would short or someone else would short intraday if it's not acting right, and that's great. It's just, the differences in styles of trading. So, IMRS on this chart. So big gap down, kind of bouncing in an area of support. Those charts are always kind of hard for me. Let's look at the 60-minute chart. That always changes things. So gap down, and so here's an example with this IMRS on the 60-minute chart, how I talked about, you get these gap downs, it moves lower, you finally get a move off the bottom. The 50-day or 50-period exponential moving average has slowed its rate of descent, which is good. So what we want to see is hopefully for this to flatten out and this price to chop around for a while, and then maybe it'll start to move up. So currently, there's no trade there for me on a longer term view. If you're scalping it off the 5-minute charts, then that's great, but that's not, kind of what my style is about, and it doesn't mean that it's wrong. I just am speaking from my perspective on things. So I would be watching this to see what happens here, and if it can get back above this and have it start trending higher, then I'd be interested in it. But currently, there's just nothing there for me. So. I know. My webinars are not usually this long. I had a lot of information that I wanted to talk about on the front side of things, and probably the whole Harry Potter thing took up way too much time, but, that's okay. So, anyway, probably I'll do fewer webinars, but maybe they will be a little more comprehensive as I do them. I used to do a couple a month, and I'm going to probably do one a month or maybe sometimes two. So, anyway. So I appreciate everybody being here tonight. If there's no more questions, I'll shut stuff down. Like I said, I'm over in the swing trade room. If you guys have questions, I prefer to get them in there. It's just easier for me. You can send me a private message there. That's cool. I'll answer you in the other room, but I try and keep my focus next door since that's my responsibility now. So, but yeah, always hit me up over there if you have questions. That's cool. And come hang out with us once in a while, or come post some charts and we'll send you started. So, anyway, all right, so I'm going to shut this down. Stop recording.